Every day, chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
Hello, good morning everyone and welcome to London Open session. London session open, sorry. Hope everything is well. Wearing a suit today, going to the Forex Expo. So this is going to be quick, especially after the government shut down last week in the US. So we don't have much news to talk about. So we'll take a look at the numbers that we have on the calendar, and then we'll take a quick look on the charts to prepare for the week ahead. All right. Good morning, Celestine. All right, guys. Let me just share my screen. Okay, it's there. All right, great. Let's get to it. So Monday and Tuesday we don't have anything of high impact. So the first day of high impact news will be on Wednesday, which is after tomorrow, October 8th. We have the crude oil inventories reading. This is like, I think this is wrong. It should be USD. Anyway, so the previous reading was at 1.792. This, if it comes higher than expected, we are expecting a dovishness in bearishness in oil prices. If it comes in lower or it comes in as a shortage, this could mean like more demand or less supply, one of these two, which could be bullish for the oil prices. And we have the 10-year note auction. The last reading was at 4.033. This is after the Fed cut 25 basis points. So I expect it to be somewhere around the same levels. It wouldn't be lower or much lower. So I believe it would be somewhere around 3.99 or 4%. And we have the meeting minutes from last month. So they will announce the meeting minutes from last month's meeting, the FOMC. And in that meeting, or in that announcement, we will see the minutes of the meeting, what did they agree on. But to be honest, guys, we already know what happened, and we already know, we already covered what the statement or the FOMC statement was about, even by then. Now, let's move to Thursday. We have a speech for Powell, which could bring, I'm 100% sure he will talk about the government shutdown and how this shutdown is blindsiding the Fed, because they need the data that comes from the federal offices and the US, especially the statistical offices, to take decisions or make decisions according to the data. Now they don't have, as you saw on Friday, the NFP was pulled off the calendar, so they don't have timely data to rely on. So this could be a challenge for the Fed. But historically speaking, whenever this happens, if they don't have data, they go dovish. But me knowing Powell, I believe he will not be dovish. And as he said previously in the last statement and the last press conference, he said he will be data dependent. So he will depend on data. If he don't have data, I think he will not change interest rates. He will not cut rates. He will stay or keep the rates as is. And then we have the initial jobless claims. That's an important number. It shows the strength or the health of the jobs market. If it comes in higher, it means that more people are claiming to be jobless, so are looking for jobs. So that's a negative number, which is rate cut friendly. If it comes in lower, it means that uh, the Fed doesn't need to rush to cut rates because the jobs market is still tight. The next one is the 30-year bond auction. Also, the last reading was 4.65. This was around the period of the rate cut, the previous rate cut. So I believe it will be somewhere around the same numbers. That's for Thursday. And for Friday, we have, okay, now we're expecting the non-farm payroll to be released this Friday. Hopefully, like nothing changes, they will be able to release this number on Friday, October 10th. And of course, the unemployment rate. These two numbers come hand in hand every time, or they get released at the exact same time every time. So there's okay. The average hourly earnings is also a good number and an important number. It's expected to stay unchanged. If it comes in higher, that's positive for the jobs market. If it comes in lower, that's negative for the jobs market, which is rate cut friendly. The non-farm payroll is expected to be higher than the previous, which was 22,000 new jobs. It is expected that the new number would be 51,000 new jobs in September. But if the actual comes in higher than this, it means that the jobs market is still tight. The Fed doesn't need to cut rates urgently, and that their decision of cutting 25 basis points and holding and waiting for data would be the right decision. Now, if it comes in lower, that's the tricky part. If it comes in lower, it is expected that the Fed will have to cut rates to boost the jobs market because, as you know, lower rates mean lower cost of borrowing for the companies, so they have more profit margins. They can afford to hire more people, which would boost the jobs market. All right, the unemployment rate, the previous reading was at 4.3%. The forecast is at 4.3%. If it comes in higher, that's a very, very negative number for the jobs market. It has to stay around 4.3, 4.2, as per the Fed's statement. If it starts climbing above 4.3, I think we will be hearing more of the recession talk because historically all recessions started with one thing in common, which was the unemployment rate climbing or starting to climb. Now, every recession has a different reason, it has different characteristics, but the one thing in common is high unemployment rate. That's why this number is very, very important. If it comes in higher, that could be very negative for the dollar, the jobs market, and they will have to cut rates as expected by the markets or as priced in by the markets. All right, guys. Do you have any questions before we move to the charts? Okay, what am I expecting in gold? We'll get to that in a minute. Putting this analysis is better than a lot of trading. A lot of trading more about this. I'm seeing. Okay. We will talk about gold and Bitcoin. And trade, I know you see market make a move and goes opposite Bitcoin. Okay, so we have a good question here. My question is about risk management. Like when we get into a trade with 1 to 2 risk reward, and we are seeing the market make a move in our favor, but then goes opposite with volume, should we stop or wait for stop loss? Now, if you haven't moved your stop loss to break even after it started going your way and it reversed. If you're asking me, I would wait for the stop loss because that was the plan. I never change my plans, even if it costs me money, because sticking to the plan will save me more money than the money I will save by trying to outsmart the market. I have a plan. I follow my plan, either stop loss or TP. even if I want to trade or manage my trade in the middle, what I would do is the following. Um, I would plan what I want to do. For example, if I want to take partials, this should be a part of my plan before I enter the trade. If I want to move to stop loss, my stop loss to break even, I should have that in my plan. I don't just improvise. I plan everything because I'm not that smart. I want everything to be structured. I want everything to be um, calculated beforehand because I don't want to take any emotional decisions. So that's my advice to you, my friend. Okay, what else do we have? My voice is echoing. Okay, that's an important one. Okay, can you hear me, guys? Can you please confirm that my voice is good? What do I think about today's gaps? We will get to that once we move to the charts in a bit. Okay. Is my voice still echoing? Okay, so yes. I'm sorry, I'm not just a little robotic. All right, so let's move to the charts. What do you think, guys? Time for the charts. And we say share screen. Okay, so can you see my screen? All good? Yeah. All right. So now let's start, as always, with the DXY. Now we saw a break above the medium term downtrend and a retest and a failure to go below the trend line again. That's on the daily time frame. You know what? Let's start with the weekly as always. So the weekly it got rejected pretty bad a couple of weeks ago to the upside. Then we had like a bullish close. Then last week was somehow bearish, but it did not cancel out the previous move. And now we're back. We opened bullish. So the pivot point for me would be 98.9 or let's say 99. If we break above 99, I believe we will start to climb towards the 102, 103 area. All right. So that's for the weekly chart. Let's move to daily. The daily, as we started, as we said when we started, um, it broke above the trend line. It's retesting. So in order to confirm the reversal in this medium term downtrend, we need to see it break above the 99 and close above the 99 level. All right. Okay, so that's for the dollar index. Now let's move to euro. Euro is the exact opposite of the DXY. There was this like medium term trend. We broke below. We see it clearer on the daily. We broke below the trend line. It went up to retest the trend line from the outside, and it started going down again. Now, similar to the DXY, but the opposite. Um, I'm waiting for a break of this level, which is 1.1640. Once it breaks it, I would have three lower lows, three lower highs, which confirms a trend. So, like a correction might be starting soon, because we now have like let me draw it for you. We have this. one, two, three, four. Okay. So once we break this level, which is the 1.1640, we would have three lower highs and three lower lows, which is the definition of a downtrend or a confirmation of a downtrend. It shouldn't mean that it would reverse the whole movement, but uh, it could go all the way to 1.12, for example, if it decided to start trending down. But till now, it is not confirmed. The downtrend or the medium term movement is not confirmed. It needs to break and close below 1.1640. All right, guys. Let me see if you have any questions before going forward with this. Okay. NASDAQ will okay. So now volume up. This is clear. All right. So let me go back to the charts. So that's for Euro USD. I'm expecting it to, if it breaks 1.1640, I'm expecting to see a continuation to the downside, because even look at the 4 hours, it's below all moving averages, which is somehow bearish to me. And we're trending downwards cleanly, but it's still not confirmed. All right. If it breaks this, I think we can safely target the 1.14. All right, the next one is GBP USD. We start with the weekly chart. Okay, so it reached here, then started, it got rejected pretty bad, and closed the past 2 weeks bearish. The very last week was like tried to be bullish, but it could not cancel out the previous move. So if you break below the 1.3380, that could be a sign that the weakness will continue. That's for the weekly. Let's move to daily. Okay, so if you look at the daily chart, you would see that we had an uptrend, okay, a medium-term uptrend. Then we broke below and we retested the trend line from the outside. Okay, we are retesting from beyond the trend line. So now we need to see it break below this level, which is 1.3140. After we close below or beyond this level, we have a clean range all the way to this level. So this could mean like a very strong recovery in the US dollar, a very bad year for the GBP and the euro, but these things take time because be careful, we're looking at the 1 day or the daily chart. So this analysis is not for today or tomorrow. This is like somehow medium term. It's not long term, but it's medium term. So this kind of stuff, this kind of analysis takes time. So don't try to build your biases based on this analysis. Okay, this takes time, but it's good to have it on the back of your mind that there might be a reversal to the downside in everything against the US dollar, and the US dollar might recover all the losses and start climbing up. In fact, let me show you what I think will happen with the US dollar. That's the weekly. I believe we will see one more drop, okay, which would be like to hunt stops and sweep liquidity, and then we'll start moving all the way up back to 120, which would be very negative for the rest of the market, and very negative for gold, silver, and everything priced against the US dollar. Okay, so that's it. Let's move to the USD JPY. Okay, so we had like a very strong gap in the USD JPY. Mainly, this was because of the strength of the USD. All right, so of course, the geopolitical stuff affects the markets, but there was a question. I read it while I was still talking about the calendar. Let me try to find it 1 second because it was a good question. Okay, Japan geopolitical didn't impact whole forex pair. It can impact JPY, not correct. Okay, now Nahat Mahmoud is saying Japan geopolitical didn't impact the whole forex pairs. It can impact only the JPY pairs. This is not entirely true, but it's true, but not entirely true. Okay, because um, the DXY or the dollar index is made of a basket of currencies. Okay, so JPY is one of those currencies. So if JPY like drops in value, that could strengthen the USD. If the if that strengthens the USD, it would affect everything else. Got me? So everything is connected in the markets. You cannot isolate a pair or a currency or an asset from the rest of the assets because, of course, everything is connected. We have another question. How many indicators should we focus on initially? One or two. Like basically, you see a lot of lines, but those are the same indicator. Those are one indicator, which is the moving average. Okay. So what you see here is just a variation of like a technique of using moving averages. Okay, how do you integrate and how do you resolve conflicts between the two? Okay, so Loving Nature guy is asking, how do you integrate fundamentals with technical analysis in your trade planning, and how do you resolve conflicts between the two? Now, when I plan trades, and we were talking trades, not investments. When I plan trades, I don't give much attention to fundamentals because fundamentals should be like building the idea or the thesis behind your trade. But when you reach the point of planning the trade, it should be purely technical because what brought you to plan such a trade if you didn't check fundamentals and you didn't check technicals or like higher time frame technicals. So if they don't align fundamentals and technical, I go with technical. If they do align, I also go with technical. So that's your answer. Is this trade active? Yes, it's active, and I'm expecting it. I mentioned previously. I mentioned previously in a previous live stream that I will keep this trade. That's the last trade I have this year. I will keep it. Either it hits stop loss or TP, but I don't feel very good about it. I think it will hit stop loss, but whatever. We made good returns on euro, GBP, gold, silver. So I'm just gonna leave that because I don't like to change my plans. If you think DXY going to 110, why you shorted USD JPY? Now that was before. This trade was like very long ago. If you can see, it started like let me check when exactly. This has been going on for like 3 months now, so that's mainly why. That's why I'm telling you I don't feel very good about the USD JPY trade, but I do not change my plan. The plan is stop loss or TP. It doesn't look very good, but it's still not invalidated. It isn't. It didn't get invalidated yet, so I cannot move. I cannot just close it and say, "Let me run away from this trade." No, it's still valid. The trade is still valid. I don't feel very good about it, yes, but I don't care what I feel. I trade what I see, not what I feel. All right. What else do we have? Okay, so let's move to the next one. Everyone is asking about gold. Let's go to gold because I will need to move to the expo now. We have speeches and we have interviews, but I couldn't just leave you guys alone. I had to, what's it called? I had to prepare you for the week. So the weekly chart on gold is very, very bullish, and nothing new. The daily, very, very bullish. The 8 hours, very, very bullish. The 4 hours as well, it's very bullish. Nothing is more bullish than gold nowadays. So unless you're scalping, never think of pressing the red button, which is the sell button. I wouldn't do that. Every time it goes back to the trend line, I'd happily buy. Otherwise, I won't get stuck in a short in such an environment of a very impulsive trending upwards movement. Okay, that's for gold. That's 4 hours, 1 hour. Okay. So yeah, talking like medium term, as I told you about the what's it called, the DXY. If the DXY starts going up and starts like pushing higher and higher, that would definitely be negative for the gold. Okay, so I believe if gold starts to retrace, it would go like minimum to like it would retrace by like $400, because if you go back, we are up from 3,200 something, 3,200 like 50. We're almost up $700. So if you want to take the Fibonacci retracement, which would be 61 or 62%, almost 61.8. If you want to take the Fibonacci of that, so it should drop somewhere around $400 out of the $700 that it climbed. So why gold is so bullish? Is it because of U.S. government closed issue? That's one of the reasons, of course. But can gold hit 3,975? It can hit 5,000 if you want. Yeah, that's a possibility. But if you're asking today, we still need to see, because we're early on in the session. The U.S. session hasn't opened yet, so I don't know. Going back to the question, which is why is gold so bullish? Is it because of U.S. government close issue? The problem with gold is not only the government close or the government shutdown. Everything else is wrong with gold. We have wars. We have like in all parts of the world. We have tariffs. We have economic tensions. We have geopolitical tensions. We have the government shutdown now. So yeah, all of that fuels the rally of gold. So I hope that answered your question. Your voice is too low and noisy. I'm sorry for that, guys. I'm trying to fix it, but I don't know what's happening. I'm not in my usual city. Okay. So let's finish with the NASDAQ, because I remember someone asked me about the NASDAQ. So let's take a look at the NASDAQ. You know what's not normal is that the US stock market is breaking all-time highs while the US government is shut down. That's not normal. All right. So let's go back to the charts. The weekly is very bullish. I believe it's still going up. No signal of weakness yet. We go back to the daily. Daily is also very bullish, but we could see this level before continuing upwards, which is 24,660. So we might have like a 200 point drop before continuing upwards. What else do we have? Let's take a look at the 4 hours. The 4 hours. Okay. So here we have something. Now the trend line, or the trend speed has changed or has shifted. 24 hours and a day, using two different tools or analysis tools. So never think of selling gold, at least for this week. Never think of selling the stock market or the NASDAQ, S&P, Dow Jones. Um, Keep an eye on the USD and everything priced against it in terms of FX pairs. I'd look at Euro. I'd be watching for the 1.1640 level, and I'd look out for the GBP USD, and I'd be watching the 1.3140 level. So that's pretty much it for today. I'm going to take your. Okay, now fine. Am I back, guys? Okay, so where did you lose me? Where was I? Like, where did I reach? So that I can know where to repeat. Can someone answer, please? We need help to know where we stopped. Okay, so around 3 minutes, no problem. Uh, so yeah, I was talking about the. Okay, got you. So what was I saying? I was talking about the Nasdaq. I was saying that the speed of the trend slowed down. It was too steep. It flattened a bit to become around 44, 45 degrees, the angle of the trend, which is more healthy and more sustainable. If we look at the trend line, it coincides with the 50-day moving average at 24,660. We have the same confirmation and the same number coming from two different time frames. I wouldn't sell Nasdaq. I wouldn't sell gold. I'd keep an eye for Euro USD and GBP USD. We might be witnessing a reversal in the medium-term trend, and at least for this week, I wouldn't sell gold, silver, Dow Jones, S&P, Nasdaq. I wouldn't even touch the red button unless I'm scalping, of course. But I'd like to be safe and buy and be with the trend, not against the trend. All right, so that's it for today. I'd like to take some questions. Yeah, no, it's fine. Bitcoin. Yes, sorry. Someone asked for Bitcoin. I'm gonna talk about Bitcoin for a minute and then I'm off. So yeah, the weekly now we have a new all-time high. By the way, the climb in Bitcoin was mainly because of the what's it called, the government shutdown, because this uncertainty helped the crypto market, mainly the top coins. I'm not talking about the altcoins or the meme coins or that kind of stuff. No, I'm talking about the main coins like Bitcoin, Ethereum, and Ripple. So that's very bullish. That was a very bullish candle on Bitcoin. The previous week, we said that we started to see some strength on Bitcoin, and like rightly enough, it closed very bullish this week or the past week. The daily is still very bullish. We're above all moving averages. We're above all important resistance levels. It's still going up, even the 8 hours. So we might be looking at like Okay, guys, so we're having a bit of technical issues, but anyway, we're done for the day. If you have any questions, you know where to find me. I hope this was helpful. As I told you, just pay attention and follow the trend. Do not be shorting gold, NASDAQ, the stock market in general. Do not try to short Bitcoin. Those are very clear and clean uptrends. Go with the trend, place your stops, manage risks, and as always, trade responsibly. And again, if you need anything or any help, you know where to find me. Have a good day. Have a good day, and good luck this week trading. Bye bye.